You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phone. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Monday, 26th day of August, 2019. Thanks so much for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. Let me put up a chart. The S&P 500 Emini Futures. Here we go. If you can't see the chart, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds. And that will give you one-click access to the show each and every day. On the days you're out of the office, away from the desktop, go to youtube.com/CFRN/live, and there you'll find a real-time simulcast of the show as it unfolds, brought to you by the good folks at YouTube. Thanks, YouTube. All right, we are looking at a 30-minute chart of the S&P 500 Emini Futures. We had a few swing trades last week that triggered and found their target. We'll look at this one just real quick. This was the S&P. The alert was to be short 28.92 and to 85, down to 72, down to 28.57. Here's 92. There's the first target. There's the second target. And that would be the final target right there. Alexa, 28.92 minus 28.57.
2,892 minus 2,857 is 35.
Alexa, 35 times 50.
35 times 50 is 1,750.
$1,750 per contract traded. 35-point move from the entry to the final target. $50 per point. 35 points, $1,750 per contract traded. Of course, for the trader who has earned the right to trade 10 contracts, that would be a $17,000 move. Last night, we had a gap lower open on the S&P, the Dow, the Russell, the NQ. We were just gapping all over the place last night. Gap lower open took us down, and we opened, you'll notice, these are last week's weekly trading zones. Partners typically get the weekly trading zones 6:15 a.m. Eastern every Monday morning since December 14th of 2009. There was a hitch in the giddy up this morning, but they're out there now. I keep last week's zones up on the chart for the show, for the benefit of the community at large. Come Thursday, I'll reveal this week's zones to the entire community, because as you can see, if you had jotted down last week's zones last Thursday, when I encouraged you to, Sunday night, last night on the Globex Open, might have been beneficial. We opened at a weekly trading zone. We continued lower to the weekly trading zone. Back up, consolidation at 31.32. Continued higher, 264.65, consolidation. Now remember, only 3 things happen at a weekly trading zone. The most likely thing is what you see here, 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 and here. Consolidation. These are 30-minute candles. If you break it down into a smaller time frame, such as a 5-minute, you'll see just how much consolidation takes place right at that area that we call the weekly trading zone. Second most likely thing is rejection. That's when you see a wick reaching down to touch a zone, and then it just runs the other direction. Okay, up here, nice example of rejection. Price went up. See, this was a big green candle all the way up to the zone, but by the time this 30-minute candle closed, you're left with just a wick touching the zone. That's rejection. Slice. Here's a good example of the slice. Price sliced through that zone like it wasn't even there. What we expect to happen after that is for price to pull back to the zone that it sliced through, and in this case confirm it as good resistance, and then continue in the direction of the slice. Okay, so zone to zone to zone, up to the zone, back down to the zone, back up to the zone, back down to the zone, up to the zone, down to the zone, and we're trying to get back up to the zone. Now, from this zone at 28.64 up to the zone overhead at 28.78, or 65 to 78, that would be 13 points. Okay, Alexa, what's 13 times 50? Alexa, what's 13 times 50?
13 times 50 is 650.
I knew that. Thank you. All right. So,
I don't know that.
that's okay, thanks. $650 per contract traded, up and down and up and down and up and down and on the way back up. Okay, that's wide-ranging consolidation. And this one here, yeah, almost got this. Zones are an area, so this one missed it by 1.5. Okay, so we've got 1, 2, 3, 4, 5, 6. Working on number 7. Alexa, what's 6 times 13?
6 times 13 is 78.
Alexa, what's 78 times 50?
78 is usually defined as an early type of shellac-based
Alexa,
phonograph
Alexa,
record.
Alexa, stop. 78 times 50, please.
78 times 50 is 3,900.
As per contract, just working it zone to zone to zone to zone to zone. Heading back up to the zone. Okay? All right. Real quick, let's take a look at a daily chart. We had a bearish cross back on August 5th. We had a leg to the downside. We pulled back to the BBC. Another leg to the downside. A pull back to the BBC. Last week, we fought the BBC, or consolidated at the BBC, for 1, 2, 3, 4, 5 trading sessions. And then, of course, Friday took us lower. Now, we had a low, a higher low, a higher low, and Friday gave us an even higher low. Today, last night, as you can see, we have a lower low. Question is, will it become a lower close? I'll have to wait to the end of the session to figure that one out. Okay. With all that said, we'll go over the rest of the swing trades that triggered on Friday when I come back. We'll take a look at the Concierge Trade Alerts from last night. We'll look at Logic 247. Let me give you the numbers from around the world real quick. These are cash markets starting here in the U.S. Currently, the Dow is up 230 points, almost 1%. NASDAQ up 75, almost 1%. S&P 500 up 23, a little better than 0.75%. And the Russell 2000 up 11, that is 0.75%. In the commodity basket, crude oil down 11 cents, trading 54.06 last. Gold up $3.10, trading 15.4070 last. In the Asian markets, at the close, Nikkei down 449 points. That's well over 2%. Shanghai down 33. That's a little over 1%. And the Hang Seng down 499 points at the close, almost 2%. And in European markets, at the close, FTSE down 33, DAX positive by 46, and the CAC posted a gain of 24 points on the session. That gives us a red day in Asia. It gives us a mixed day in the UK. And it's a big green Radio Monday here in the US of A. Let's go to Michael, get a recap of what happened in the live training room today. When I come back, I have all that I mentioned, and I have a little bit of news for you. A couple of different articles I want to share with you. And then we'll get into all the other stuff I mentioned. Plus, we'll chat with John. All that in answers to your questions. Michael, take it away.
Okay, I got it. I got it. All right. Happy Monday, everybody. All right. Today is Monday, the 26th day of August, 2019. If you have not taken a free trial with us, go to the home page at CFRN.net. Right over here in the right-hand column, it says 5-day free trial, apply.cfrn.net. If you click on that, you'll be brought to this page where all we ask for is your name, your email, your phone number, and you can tell us about your biggest trading challenge so we can tailor one-on-one training specifically for you. Hit the send button, you'll be sent a confirmation link. And when you click on that confirmation link, then we know that you took the free trial, and we'll be able to send you everything you need to get into the live training room in the morning. Okay, as I said, today is the 26th day of August, 2019. If you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. Today, we made 9 ticks in crude, 2 ticks in gold, and 8 ticks on the ES. That put us at plus 210 on the morning session. Today it took 20 minutes and 2 trades to get to the goal for the day. At that point, we were up $100 per contract. And we took a total of 9 trades. So on the month, now we're at $6,243. That's over 18 days, averaging $346 per day. And on the year, we're at $23,795. That's over 152 days, averaging $156 per day. Okay, now let's go take a look at what we have done today. All right, we missed a trade right here. We missed a trade right there. Then we picked up 5 ticks there and 5 more ticks there. That's where we got the goal for the day. And we missed a trade there, there, and there. Now that would have been a break even. That would have been a break even. That would have been a break even. We missed a trade here that would have been profitable. And then we stopped out on a trade here. Okay. Then we get into the break. Yeah, it looks like we missed a trade. Well, during the break, there was a trade right there for that leg down. There was a bounce off the BBC here for that leg up. And that was it. That was it for today on gold. Okay. Let me just go look at something over here. Okay, here we go. On the euro. We had nothing today on the euro. We almost had a trade set up in here, but the cycle was red and started going down. If I'd have gotten it, we'd have probably gotten a break even on it right over here somewhere. And that was it for the morning session on the euro. Even during the break, it had nothing. Not a whole lot happening with the euro today. Okay, crude oil. We did have some stuff going on with crude today. All right. Started out here on this first trade here. We picked up 5 ticks. Second trade, we picked up 2 ticks. Third trade, we stopped out. Now that put us at -1. Then we picked up 10 over here to put us at +9. And we had a break even there. I missed a short here and a long there. Both would have been profitable trades. Let's see what happened during the break. Well, not really a whole lot. Not really a whole lot going on during the break. Yeah, really nothing. Okay, now we'll look at the ES. Okay, now we wanted the ES to be trending in here. That's why we didn't do anything all the way through here, because we didn't have a good trend. Then we finally got a trend over here. It pulled back, gave us an entry opportunity, and we took 8 ticks profit on that trade. It didn't have a follow-up trade because the cycle started going up too steep. All right, then it just got sideways in here, and sideways in here, and sideways in here, And sideways in here. Yeah, it was just a mess today. The ES was. There was a long opportunity here. That would have been a break even right there. Then it was sideways again, and again, and again. No, there were no trade setups in there. Then we get into the break. And it looks like right here there was a bounce off the BBC. That would have given you that if you'd have stayed in it. Okay, and that was it today. So the ES, we picked up 8 ticks on. Okay, now that's all we need for the goal for the day, is the 8 ticks. So, you know, you didn't have to sit through all that sideways stuff after you got those 8 ticks. All right, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 26th day of August 2019. Today we made 9 ticks on crude, 2 ticks in gold, and 8 ticks on the ES. That put us at plus $210 a contract. Today it took 20 minutes and 2 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 9 trade opportunities today. So on the month now, we're at $6,243. That's over 18 days, averaging $346 per day. Okay. And on the year, we are now at $23,795. That's over 152 days, averaging $156 per day. Okay. Okay. Now, if you have not taken a free trial and you want to take a free trial, go to the home page at CFRN.net, and in the right-hand column it says apply.cfrn.net. Click on that, and it'll bring you here. The Emini Training School page. Now you can go directly to the Emini Training School page if you want, eminitrainingschool.com. Put in your name, your email, your phone number. Tell us your biggest trading challenge so we can tailor one-on-one training specifically for you. Hit the send button and you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click that confirmation link, we don't know that you took the free trial. So make sure you do that. Okay? Okay. And with that, we can pass it back out to fabulous Phoenix, Arizona, overlooking South Mountain, America's largest city park, where Dwayne is currently residing in Studio A. Dwayne, if you are ready. Okay, Dwayne's not ready. All right, well then, let's just look at what we have going on right here. See, that's a valid long trade right there on the ES because the entry is below the MA1. I know we have dynamic resistance right there, but the entry is below the MA1. Now your stop would have gone to break even already because you had to close above the MA1 right there. So it'd be a break even trade. Gold's in a slow grind down. Now, the cycle is still red, so we still have a chance at a trade here. But because we have unbroken dynamic support here, we need to close above the MA1. Nothing there. And on crude, that's the trend line. Okay. Oops. Oops, I put my microphone back on. All right. So on the crude, we would be looking for a close above this trend line right now. Now, it's possible that we could bounce off the BBC here, but we haven't hit it yet. In hindsight, I know what it'll look like we did, but we haven't yet. Okay, and in gold, we need to close below this trend line. Okay. And yeah, and that's it. Yeah, I did, but I was just looking. Okay, you can grab it and pull it back over if you want to.
Got it.
All right.
Recap of the recap.
Today it took 20 minutes and 2 trades to get to $100 per contract.
That's a good bingo.
It is.
Okay, guys, we were talking about price trying to make it back up to that zone overhead. And as you can see here, while Michael was doing the recap, we did hit that zone from last week, 78.79. So we didn't quite make the 13-point journey here. We missed it by 1.5. 1, 2, 3, 4, 5, 6, 7, 8, and there's number 9. Number 9. Alexa, what's 13 times 9?
13 times 9 is 117.
Alexa, what's 117 times 50?
117 times 50 is 5,850.
Seriously? Thank you. Okay. Well, here we go. Now what? Now where do we go? Well, let's back up for a second. I'm going to give you these, let me give you these little bits of news first that I want to share with you. Bitcoin has hit a $100 billion, B as in boy, market cap. Realized market cap, an alternative calculation of Bitcoin's market capitalization, is now at record highs. Calculated from multiplying the price each Bitcoin last traded by the size of each trade, the figure for Bitcoin passed 100 billion on Sunday, yesterday. Bitcoin never sleeps. The achievement is just one more in a string of near constant records for Bitcoin, which recently posted all-time highs in areas such as hash rate and daily trading volumes. As cryptography pioneer Nick Szabo added, the realized market cap progress comes in tandem with some of the lowest volatility seen on the Bitcoin network since 2012. The long-term chart reflects the superior deep safety, global seamlessness, and monetary soundness of Bitcoin. Cointelegraph reported, if taken using the realized cap, focusing on liquidity and trading volume, some claim Bitcoin's total market dominance, in fact, lies above 90%, far more than 70% predicted by crypto data aggregators. My next bit of news is Bitcoin protected as speech under the First Amendment. Never even thought about that. There is a concept that exists in the crypto space that effectively states Bitcoin, BTC, is code, code is speech, and speech is protected under United States law. Legal experts were surveyed about digital rights, the First Amendment, and crypto. The claims now are based on arguments from before the days of Bitcoin, which posits software as free speech and thus state that it should be protected by the First Amendment of the United States Constitution. The topic was evidently first brought to public attention back in 1999 when digital publisher Eric Corley went to court against Universal City Studios for publishing source code that decodes DVDs. Referring to that case in 2001, John O. Newman, a circuit judge of the U.S. Court of Appeals for the Second Circuit, had this to say: when the framers of the First Amendment prohibited Congress from making any law abridging the freedom of speech, they were not thinking about computers, computer programs, or the internet. However, Neil Richards, one of the world's leading experts in privacy and information law, as well as freedom of expression, argued in 2016 that code equals speech is a fallacy because it would needlessly treat writing the code for a malicious virus as equivalent to writing an editorial in the New York Times. Well, I think we can all see that's just simply wrong. Although some courts have recognized code as speech, the Supreme Court hasn't weighed in on this so far, so I wouldn't call it a settled area of law. Personally, I think that code can be used to express and communicate ideas and therefore can be viewed as a form of speech. And last, data from Coin360 revealed an abrupt change from sideways trading over the weekend to Bitcoin gaining hundreds of dollars in a matter of minutes today, having lingered on either side of $10,000 for the past 3 days. Bitcoin against the US dollar suddenly shot up to more than 10,600 on some exchanges before settling at about 10,350. Now go back months and we were talking here on the show about what a big deal this 10,000, what a psychological deal this $10,000 watermark is. Remember, Bitcoin has been to 20,000. We're sitting right now at a 50% Fibonacci retracement from the all-time high. 50% Fib retracement. We know what happens at 50% Fib retracements quite a bit. Our argument has been that Bitcoin will fidget as it has done, above and below, above and below, above and below, and then back above. And then there's going to be a time when we pull back to that 10,000. It holds, and we never see 10,000 again except in the rearview mirror. Bitcoin is a coiled spring about to explode higher, according to Bitcoin bull Max Kaiser. Now, Kaiser had previously claimed multiple times that the Bitcoin price was due to grow in line with increasing network performance. Specifically, he highlighted mining metrics as a hint markets were about to expand. Others were attempting to explain why Bitcoin had begun gaining and losing several $100s within minutes at irregular intervals. One theory revolved around margin trading, the increasingly popular tool offered by major exchanges such as Binance and most notably BitMEX. As the Twitter account known as Squeeze noted, a deluge of margin calls produces just the form of price action on markets which had previously baffled some. The effect of cascading margin calls and stop-loss triggers causing $300 slippage between XBT perpetual swaps on BitMEX versus spot BTC. So there you have it, a little bit of bullish news on Bitcoin and crypto in general. As you can see here on this S&P chart, we once again found resistance at last week's zone, 2878/79. And if this little red candle tells the tail of the tape, looks like price wants to go back down, find support again at that 64.65 area. Okay, so we covered this swing trade from last week. Let us take a look at the others that triggered Friday. Okay, that's the S&P. Here's the NQ. On the NQ, the entry was 76.48. First target, 76.28. Second target, 7600. And the final target, 75.48. So from 76.48 to 75.48, that's 100 points. Now the NQ pays $20 per point. So 100 points times $20 per point equals $2,000 per contract traded. This alert was issued Tuesday, August 20th at 7:15 p.m. Eastern, and it triggered right here on Friday. Crude oil. Swing trade alert number 9. Consider being short crude 54.80 to 54.60 to 53.50. That's 130 ticks at $10 per tick. That equals $1,300 per contract traded. And you'll notice that what happened is price went from zone to zone. It attempted a pullback here to get back above the trigger, missed it by, well, what we in the business call a smidge. Yeah, technical term. Missed it by a smidge. All right, if you have any questions about any of this, please put them in the chat box, okay? So the S&P, again, back up. Okay, here's the S&P, number 7, number 8, and crude, number 9, okay? Now, you'll recall John and I were having a conversation back last week about copper. We looked at this as a potential head and shoulders, that being the head, the shoulder, and this somewhat of a misshapen shoulder, but a shoulder. And this being the neckline. Okay, we've now penetrated that neckline. This vertical line represents a measured move. What's a measured move? A measured move is from the top of the head to the neckline. Technical Analysis 101 says that when the neckline is broken, as you see here, now remember we're looking at a monthly chart. The measured move in this case could take us down to about 215. Copper, for every penny of movement in copper, it pays $250 per contract traded. Alexa, 255 minus 215.
Win 55,212
Alexa,
to is a
Alexa, stop. 255 minus 215. Alexa, 255 minus 215.
255 minus 215 is 40.
Okay. Alexa, what's 40 times 250?
40 times 250 is 10,000.
Okay, that means if price does go the measured move, it's a $10,000 per contract move. Yeah. Now, while we're still on the swing trader, the logical swing trader is out of beta, ready to go to work for you. Now, how confident are we that you'll find the logical swing trader, an indispensable tool that you simply don't want to trade without? We're so confident, we're giving you 30 days to earn the money to pay for your subscription. I've been working on putting up a web page that you can just go to and click. Just reach out to Valerie. You can call her 949-42-EMINI or email her support@cfrn.net. Get the link, get signed up. First 30 days are free. You have an option of monthly, or if you want to save about $1,500, you can go annual. Your first 30 days, that's for you to earn the money to pay for your subscription. Okay? Now, once your subscription is activated, you can cancel at any time. All we need from you is to notify us that you no longer wish to receive the trades 5 days before your next billing cycle. As an example, if you've signed up for monthly and your billing date is the 15th of the month, just let us know by the 10th of the month and you won't get billed again, okay? If you choose annual, same thing. Make sure we know 5 days before your annual subscription expires, and we'll make sure that you don't get billed again. Okay? All right. Okay, we usually start with the concierge. Let's just jump to logic today, and I'll run through what happened last night since the Globex Open. We are now on week 56. Okay. Remember, we had a gap lower open. We saw support on the chart. So we wanted to be positioned. If the market decided to take out that support and trade lower, we wanted to be prepared on the S&P, on the Dow, on the Russell, on the NQ, crude, gold. That didn't happen, but that's okay. These orders are still valid. Now, if the markets continue higher through today and into tonight, these will be marked as no trigger, okay? All right. If the market turns south, then these will trigger and will report the results accordingly. Here's a euro. Okay, there's a British pound, S&P. These were gap fill trades. So it's S&P, Dow, Russell, NQ, gold, crude, Australian dollar, no trigger, and then we have some others that have not triggered, and this S&P did trigger, did find its target. Now, all of the other trades are valid. Lovely way to start the week. Don't have any stop outs as of yet. Okay, week 56. Last week, week 55, we had a total of 79 alerts. 14 of them never triggered. That left us with 65 actionable alerts. 13 were stopped out, keeping in line with our benchmark goal of no more than 20% of alerts being stopped out on any given week. And we've been very blessed to maintain that average for the past year. Year number 1, 20%. We're now 4 weeks into our second year. And so far, again, we've been blessed, and the 20% stands. Okay, if you have any questions on any of that, put your question in the chat box, and I'll be happy to answer it. Let's go look at the Concierge Trade Alerts from last night. If you would like to grab a screenshot of last night's Concierge Trade Alerts, they got out last night at 6:25 p.m. Eastern. I'm going to drag them up. There you go. 5, 4, 3, 2, 1. Got them? Great. Okay. All right, S&P. On the S&P, Concierge Trade Alert. Consider being long, 28.96. Never got there. Consider being short, 28.08. Never got there. No Concierge Trade Alert trigger last night on the S&P. If we jump to the Dow, we're looking to be long at 28.96. I'm sorry, 25.975. 25.975. The swing high was 986. We talked about Mike Reed's term a couple times last week, the prairie dog. Okay, he uses it a little bit differently, but it actually kind of means the same thing. This candle, if you know what a prairie dog is and how they stick their heads up out of the hole and look around to make sure if it's safe to come out of the hole, right? So sticks his head up, looks around, doesn't find any friendly support, so turns and goes the other way. On the short side, 25240, no trigger. You may be catching on to the theme of this session, and that is sideways with no real change. Okay, I mean, we're slightly higher than we were at the close on Friday, but this and this, it's almost as if it didn't even happen. On the Russell, long at 1487, never got there. Short below 1437, never got there. Now let me say that the zones this week, now I realize that those of you that are in the audience, if you're not a partner or a passport holder, you haven't actually seen this week's trading zones yet. But I commented on this in the Telegram channel. They are wide. So even though it was a little bit of a quiet open to the week last night on Globex, and really so far today just rolling sideways, even though President Trump was speaking, and that should have just sent the market all over the place, it kind of didn't. But the zones are wide this week. When that happens, it means one of two things. We're going to spend most of the week inside of one zone, or we're going to see the kind of volatility that goes in the record books. Curls your hair, or your toenails, or whatever it is you need curling. Okay. So, in Q, long at or above 78.01, short at or below 73.17, how about gold? This is just happened to be on the chart. This is gold. This was a Concierge Trade Alert that came out Thursday night. I think we've already gone over this one. From the trigger to the zone overhead, 1511 to 1533. That would be 22 points at $100 a point. So that's $2,200 from the entry to the zone overhead. Now, the zone overhead is the trade to target. Okay, I'm going to elaborate on that here in a minute. Crude. There's the gap lower open last night on crude. Concierge said, consider being long 55.05. Hey, we got a trigger. 55.05. Okay. And swing high of this first 30-minute candle. 55.05 ran up to 55.20. 15 ticks, $10 a tick, $150 per contract traded. Now, this sideways action is not for nothing. This is the market coiling, as some call it. I tend to call it consolidation, some call it coiling, but think of a spring. You know, you're just winding it, and it's getting tighter and tighter and tighter. And when the lid comes off that thing, whether it's to the upside or the downside, look out. That's where those wide-ranging weekly trading zones for this week will come into play. And on the short side for crude, 52.80, haven't seen it. This might be one for the record books on the Concierge Trade Alerts, not triggering, having so many that did not trigger. And it speaks to the very thing I'm talking about with the zones being wide this week. So again, when we have zones this wide, either we're going to stay inside of one zone for pretty much the whole week, or we're going to be all over the place. And it's going to be a wild ride. I haven't looked at this week's news. I don't know if we have anything big coming out this week. We'll take a check on that later. Okay, next, well, that's it. Okay, actually, we do soybeans. Concierge Trade Alerts. I don't usually go over on the show. They don't have a lot of soybean traders, don't have a lot of bond traders, but we can go ahead and we can take a look. ZSX. Okay. Soybeans, long, 875. No trigger. Short, 854. You got it. No trigger. Bonds. $30-year bonds. Consider being short. 164.01. Guess what? No trigger. True story. There was a long trigger here. Bonds. ZBU. 167.04. Now, is this a cause for concern or anything? Oh, not at all. No. It's just the market doing what the market does. Swing high was 167.15. The trigger again, 167.04. So that's 11 ticks at 31.25 per tick. Bonds are kind of funny that way. It's 32 ticks to a point. It's actually 31.75, I believe. 31.75. Alexa, what's 31.75 times 32?
3,175 times 32 is 101,600.
Alexa, what's 31.25 times 32?
3,125 times 32 is 100,000.
Okay, so it's 31.25 per tick. 32 ticks to a point. So if price on the bonds, for instance, goes from 166 to 167, a 1 point move, 32 ticks, it's $1,000 per contract traded. Definitely not something we recommend for those just learning how to trade, because, I mean, it goes against you. 3 or 4 ticks, yeah, that's some tall cotton. Not the kind of cotton you want to be in. Okay. Now, I want to back up and cover something here with you. On the Logic 247, we've had, since the Globex open, 21 total alerts. Nothing has stopped out. 8 found a target out of the 21. All of the rest are still open, still valid, just waiting for price to come and find them. All right, now let me show you what I want to show you. I used this one as an example, I guess. Let's go to gold. Okay. All right. 1544. Let me drag it up so you can see it. All right. On gold, GGCZ. 1544 to 43 to 38. Okay, so 44 to 38. So we trigger here. Remember, important prices, important areas are almost always tested. If you take nothing else away from this show, do take that with you. Because whatever it is that you use to trade the markets with, over time, you'll find that what I'm saying is in fact a market truth. You can certainly use that to your advantage. Okay. So the logic alert, consider being short, 1544. And the final target on the alert was 38. Okay. Right there. Okay. So from 44 to 38, that's a $600 per contract move. 600, back above the trigger, another 600. Now, this is really important to understand. When you have a target or a final target on a Logic 247 alert, this was not just a 6-point move. You'll notice price went all the way down to the zone. The zone above or the zone below is always going to be your trade to target on any Logic 247 alert. You might look at, as an example, a 2-point trade on the S&P. Okay? Is that all we're looking for is 2 points? Not at all. That's the initial target. I don't write in the weekly trading zone on every alert. Often I will, just to make sure that you remember, on the alert I'll put WTZ overhead is whatever it is, or WTZ below is whatever it is. Because once price triggers and hits the target, the initial target that's in the alert, yes, it may re-trigger, but ultimately I am looking for it to go to the zone overhead or the zone below, because price is always trying to get to a weekly trading zone. It's another thing that you should take away. Okay, so we did the 6, and then we added another 3 down to the zone where we found good support. Right now, this one we actually triggered, hit the weekly, we hit the target, hit the weekly trading zone, bounced back up. The swing high was 1545. So if I position this in the right place, 1544, so you'll see that we had a trigger, back above the trigger, another trigger, back above the trigger, and another trigger. So that was 6 points at $100 a point, followed by 6 points at $100 a point, followed by 6 points at $100 a point. That's off of one alert from last night. Now on the recap, all you're going to see is that it reached the target. Okay, let me show you. We don't recap the additional triggers. I tried to do that in the very beginning of Logic 247 back during the beta days, but it's just too much to try to keep track of. So if the first trigger stops out and then it triggers 9 more times and they all go to target, well, we just count it as a stop out. Okay, so what you should do, if you're a passport holder, you should look at your chart. Number one, never trade an alert just because it's an alert. When the phone goes dee-dee-dee, makes a little telegram sound, you go to your computer, look at your chart, make sure you understand what that alert is all about, why it's important, why it's a setup. See, Logic 247 is not about just handing you alerts to trade. It's about not only teaching you how to trade, but teaching you also to recognize and see the setup as it develops, just like we do. We're not trying to create a dependent state here. We don't want you to have to rely on us forever. We'll be here. You can rely on us as long as you need to. Hope you'll always be a part of the family. But at some point, you should be able to look at a chart and see the very thing that I see or Michael sees and take the appropriate action, because we're not reinventing the wheel every day. Every single alert, every single trade setup is based on the same underlying principle. You don't have to worry every day when you wake up if the rules have changed, because they don't. We sealed the vault on this thing over 6 years ago. We've not changed one rule. We've not added one jot or tittle to the code. If it's not broke, don't fix it. And what we've created is fluid across all markets and all time frames. And because of the principle upon which it operates, the market would have to break in order for our methodology to break. Does that make sense? Is that you, John?
No, that's me.
Oh, okay.
No.
All right.
No, I was just going to say math doesn't change.
It doesn't.
Math hasn't changed in centuries.
Physics
doesn't
don't
change.
either. Have you seen Hider Hair, John?
No.
All right, I'm going to jingle his phone right now. Because there's not a lot else to cover, guys. I will be happy to answer any questions that you have. Let's see if John wants to chat today. And so we'll bring him on and have that chat. Hey, John, you coming on? Yeah. All right. See you in a minute. All right. Okay. He's on his way, folks.
Okay.
Now,
I'll keep an eye out for him.
all right. Let's back up and take a peek at last week here. That's not him. Here we had, consider being long, 2862. Now, I want you to, let me put this on. Whether that's a logic or a concierge, it doesn't matter. Because what I'm going to show you, see, once this triggers at 2862, whatever target might have been assigned, maybe, let's say that the target was 2864, okay? In other words, it just looks like a 2-point trade to the zone overhead. It is that, but oh so much more. Because you see, price is always trying to get to a weekly trading zone. So it goes from 62 to 64, weekly zone, consolidates, stays above the BBC. That means it's trying to get to the zone overhead. And it does. Price then comes back to the BBC. The BBC holds. So price is still trying to get to the zone overhead. And it does. We close above that zone. We stay above the BBC. And price takes us right up to this zone. Am I saying that a person could have entered this trade at 2862 with an initial 2-point target and stayed with it until it hit 2905, 40 points away? That's exactly what I'm saying. Okay? So don't misread the alert. Don't look at an alert and go, oh, that's just 2 points. Well, that's the initial target. Okay, let's get on the right side of the street. Let's make sure we're in the move as it triggers. And then as it develops, we're going to look to the left and the right, and we're going to see what the chart tells us. When you look to the right, you don't see a whole lot. But you look to the left and you'll see plenty. And you also have to look at current price action. Remember, the Concierge Trade Alerts are based on prior price behavior. Logic 247 is based on current price behavior. And when you see those two things come together, you really want to sit up and pay attention, because that is the highest probability of moves. Hey, John, welcome to the show.
Hi there.
How was your weekend?
Was not too bad. Pretty busy as always. You know,
Gotcha.
I don't have time to take time off. There's too many things going on. The kind of interesting looking at the G7 drama unfolding.
Yeah. What were your thoughts on that?
Well, I think it went well. You know, I think this this China. I think what happened, there's a little bit of a confusion over what really happened, but pretty early this morning, Trump made a comment when he was talking to the president of Egypt, El-Sisi, and kind of shocked everybody and said that they'd had a communication from China. I think it was the vice premier who's in charge of the negotiation. You know, he kind of got pushed out of the picture a little bit recently because he was the one who wanted to do the deal.
Right.
And I think there was some sort of initiative that gave them the hint that they actually put out a statement, I believe, that said, you know, they were ready to negotiate a deal and end the trading war in a calm and kind of in a calm way and something like that. So it was quite a well, it was enough to turn the market around. And you know, we even said, I said it last week, you know, don't be surprised if the market rallies overnight or something happens, because some people ask me, you know, what did I think, you know, for the Monday? And I said, look, it could be a really bad day or it could be a surprise. And we don't know which yet, but the gold did go higher, but it turned out to be a sell because, you know, as soon as this news hit, I guess it dampened the, you know, remember adding an extra 5% on these tariffs is very inflationary. And that probably would have been enough to push gold up $50 to $100. But as it was, you know, it went up about $15 or so to a peak. But you know, we've put in, well, first of all, we've hit a new high, a new 6-year high on the December gold chart. And we've gone all the way down and we've come all the way back up and we've made new contract highs, not in a kind of a 1 or 2 year chart that is usually the norm. This is a 6-year deal. It's almost unheard of. And therefore I would not underestimate the potential continued upside of the gold. But in the short term, I think we're potentially poised for a bit of a pullback. So, you know, you just have to trade carefully now, you know, don't get too carried away with the bullish side. You know, we got the move we were looking for. We run up to USLV, hit 100 this morning. It's backing off a bit. The gold stocks, you know, Newmont Mining actually almost hit a new 52-week high today. I think that's quite of a positive. I think Royal Gold hit a new 52-week high. The Nuggets and the J-Nug did not. So there's a bit of a divergence going on there. There's a little bit of a buy coming into being on the dust and the J-Dust right now, and probably worth a shot, actually, you know, for a counter trade. But what I'm getting at is this, you know, we've hit new 6-year contract highs. Usually what happens is you get a surge, you sort of get a breakout surge, and then it comes back to test the sort of breakout, which would be, you know, probably 1525, something like that, or maybe even 1500 again, and then it potentially goes for real. And under those circumstances, you could get a move, you know, that move up to 1950. But I will tell you this, I'm a little bit, you know, it actually hit my target, you know, it was 1550 or so. So having hit that, I'm a little bit less super bullish right now at this point, because there is a real, you know, you never know with all these people trying to short the gold and hold it down. The banks might be trying to intervene, you know, in the commercials, et cetera, et cetera. On the positive side, the silver, if you look at gold and silver today, it's actually a kind of a different picture. You know, we're up 23 cents on the silver. So further to what we said last week when we hit a new high, you know, a new 6-year high, I guess, on the silver as well.
There's a daily chart on silver, John.
Right. So it's a different picture from the gold. And I actually think this is pretty positive because, you know, when the silver is leading the way, not much can go wrong. You know, other than the silver can reverse later today. But generally, when, you know, if we continue to go higher with the silver, I think that tells you the economy is probably getting stronger down the road. And, you know, it's a different picture, right? So you have to be
I don't
careful.
particularly like that. I hope we can hold here.
Right. I mean, if you look at it on a 30-minute, you know, it's the silver's going sideways potentially prior to a breakout. By the way, the palladium looks poised for upside, and even the copper possibly. Copper got down to 250. I think we said we were looking for that as a target.
Oh yeah, check this out, John. Let me bring this back up real quick. We were talking last month. Remember we looked at this head and shoulders on the copper. This is on the monthly chart, and
Right.
we looked at a measure. That measured move is $10,000 per contract traded. We broke the neckline. If price does the measured move, that's equal to $10,000 per contract traded.
You have to be a little bit careful of that because we are coming off that low. We bounced today quite strongly actually on the copper. And remember, if there is a deal, I think copper could soar. So you've got, you know, if you're going to be short from here, I think you've got to be short with tight stops.
And
by the way,
there is where there's a high probability of a bounce.
Yeah,
Right
we talked about that too, and that's a good thing. By the way, you know, when you were showing the folks just as I was coming on, what does the BBC stand for again?
Bull bear cross.
Okay.
When price is above it, we're bullish, and we expect higher prices. When price is below it, we're bearish and expect lower prices.
Right, and you know, look, honestly, that's a very good guide for anybody who's, especially new people coming on. You know, if you see that bull bear cross, you've got to, you know, you have to trade around it. You know, it's getting a position on, at least the way I do it. Sometimes, you know, it's like getting on the train. If the train's shunting back and forth, when it actually leaves the station, you want to make sure you're on it. And I'll give you an example. So you know, when you see, I mean, you saw that. I mean, you should always try and think. I mean, really, the real key to making money and being very successful in commodities and futures and stuff is to, you know, you got to go let the trend be your friend, and you know, you've got to when you put a trade on, you've got to have some perspective of where it could go.
Right.
And, you know, I told you about Peter Stadelmeier, who invented the market profile, and he's, you know, a legendary trader. I mean, listen, he started on the exchange with $35 in his pocket, and, you know, he made 200 million or more. He's the one who, he just sensed that the bottom was in 1976 at 104.6, and he literally put on, you know, a couple of hundred contracts of gold, and he held it all the way to 875 on January the 20th, 1980. So, I mean, for somebody to be able to do that is an unbelievable kind of a discipline. But he did it, and that's what you should be striving for all the time, you know, to put, you know, because unfortunately, this is no longer possible. But the best trade you could have ever made from 2009 was and unfortunately it wasn't really leveraged. It was the thing that when we had that crash in 2018, you know, it was the upward VIX. In other words, the opposite of the VIX. So as the VIX went down, this thing went up. I forget what the symbol was right now, but it's like the opposite of the TVIX, right? So I remember that thing hit about $4 or $5 in 2009, right at the bottom, on our famous March the 6th bottom call, right? And there was a lot of in and out trading, because remember when it went from, probably went up from 5 to about 40 or 50, you know, into 2011. Then you had the 2011 crash, and you had another chance to get in around 18 or 19, and then it went to 140, and then, you know, then it all fell apart, because when we had that crash in February of 2018, something went wrong, and the thing literally dropped overnight from like 140. We put a short out on it, I think, on the show at the time, and it went from 140 to like 5 or something like that. Went all the way back to about 5. Then it rallied up to 20, and then it got delisted. So it's a real tragedy that thing doesn't exist anymore. But there are some ways of doing that trade. For example, you can use the UVXY today.
UVXY?
Sorry, not the UVXY. I have to go and get the symbol. There's an opposite to the UV. It's
I show a UVXY.
Yeah, there's the other side of the UV. I have to get the symbol for tomorrow, but just can't think of it right now. But that's about the only thing out. Well, there's a lot of other things. I mean, you can use Dow futures and other things like that, or Dow, triple Dows and triple S&Ps and things. But that particular index at the time did go up pretty dramatically, and it was pretty hard to beat. I mean, in terms of picking a stock, it's like picking a real big winner.
How about SVXY?
Yeah, so, that's the one. Yeah.
Yeah, I think you might be in the audience.
Right, and he knows. Mike B's pretty always on the ball.
Mm-hmm.
That chart doesn't look very good actually right now.
That's a 30-minute. You want to see it on a daily?
Yeah, be careful of them. Given the way that chart's shaping up, like this thing with China, it's not baked in the cake by any means, and I think you've got to tread cautiously.
I agree.
Because it could blow up again, and that would mean another leg down. And I think this move is not necessarily complete on the downside. Given it's a little bit like the other day. We had the 800 downer, and then we sort of have the plunge protection team and everybody, or the intervention to try and rally the market. We rallied up, and then we're basically back down to where we were before. So, and I'm not saying if you can put it on daily.
Sure. Here we go.
Yeah, I mean, it's a really terrible looking chart. To believe that this thing is going to rise from like a phoenix out of here is a bit of a tall order. I'm not saying it can't happen, because it sort of happened before, but it's a different kind of a structure, where it rallied at the beginning of June. This one looks a lot heavier and a higher volume and a few other negative things. So and you're coming into tomorrow being a Tuesday. It's if we have a down Tuesday, we talked about. I mean, if it was a down Monday today, and we had an up, we got a chance of having an up Tuesday. But being an up Monday, it possibly sets us up for further downside this week. If this Monday cannot reverse. Can you put the SPY up? See how that looks.
SPY, sure.
Or the
Okay, there's a spider.
Yeah, it doesn't look much better. I mean, you've got a sort of a doji there, which is a little bit encouraging, but and to be fair, look at the previous bottom that rose out of that bottom. It was kind of looking like it was. I mean, it was a surprise upside gap. And they had a very big rally, and that's where your BBC thing kicked in, back then, and would have given you a huge ride to the upside. So, listen, it's very hard. You can't play from 2009 to 2019. That's. I mean, some people can do that, but it's really not the game we're in here. We're more or less, because there's thousands of in and out trading opportunities that have happened since 2009. That if you played them all right, you'd be a billionaire by now. So the prospects are. I think you have a method and you stick to your knitting. You've got a pretty proven, you've proven. I think you caught that last downturn on Friday.
Yes, absolutely.
And we talked about it. We on the Thursday, you said wasn't looking too good. And to be honest with you, now it looks even worse. And, you know, some bad things happen here. This, what is it? Durable goods came in this morning, worst reading in, I think, down 3% or something, one of the worst readings in a long time. And look, you know, this is a negative for the market. The PMI, you know, approaching 50 is bad news for the market, and durable goods going negative is bad news. And I haven't seen the leading indicators lately, but they're probably bad news as well. You know, you've kind of got a triple whammy against the market. But you know, one of the tough things in life is sometimes you know, by the time the economic indicators are turning down, the market's already looking beyond those to the next upturn. So you have to keep that in mind as well. That's what makes this business so tricky at times. As we've been talking, the dusts have been rallying a bit here, and it does feel to me like you know, again, you know, we might be just looking at a bit of a pullback in the gold between now and tomorrow. And if Tuesday's up in the gold, I would go back in. I would certainly want to be long again for that. The dollar is a bit of a puzzle because, you know, yes, last week we had a big drop. You know, we had effectively a weekly reversal. Just a sec. Have a look at it here.
Which one?
The US dollar. Yeah, if you could, it's had a, you know, yeah, it kind of looks like, yeah, look at the rebound on that thing. I mean, jeepers. I mean, it really looked like death on Friday.
On Friday, yeah, it sure did.
Yeah, and we talked about that, and you know, look what happened. So, dollar ain't dead yet, and could still go higher. And but you know, it's amazing the way the gold and silver is not really getting hurt by that, and that's actually a pretty good positive. So, Dwayne, if you could put the coffee up, the December coffee, KC.
And you're looking for December?
KCZ, that's the one, yeah.
Okay, there you go.
Now, is that right?
Is that right? I don't know. That's what I've got.
So, it's up today, the coffee.
Well,
What?
You know what? It looks like I have only end of day
Okay.
privileges on this particular market.
Okay. Well, we talked about, you see, we had a key reversal three or 4 days ago, and the market did rally a bit. Interestingly enough, it's rallying again today, so it's kind of right back up. It's basically reversed Friday's down day, and that's what I'm, you know, that's a class. The reason I want to bring that up is it's because it's a classic example of a possible bottom where, you know, the thing shunts around a bit before it actually gets going. Now, listen, it's not a very strong chart, so keep that in mind. And remember, but look what happened the last time we were down here. You know, it shunted around a bit. There was a sort of a test, and this happened in the beans, you know, when the beans were coming off the bottom, and then it took off. And so could the same thing happen here? Yeah, it could. I mean, if we gapped higher in the coffee tomorrow, you know, I mean, you'd probably want to take a shot at going long the coffee today if it closes as strongly as it, you know, if it closes up and kind of reverses Friday's down action, because it could potentially take off. And with all this stuff going on in Brazil with the wildfires and you know, as well as a possible frost, you know, still winter down there, you never know, something interesting could happen. So if that, you know, if we reverse back down to the downside again, I think all bets are off. You're probably going to go to new lows in the coffee, and maybe we'll get a bottom in the fall. would be the next sort of thing to look at. So that's that. Look, the platinum, after rallying back up to 870, it's kind of, back down 10 points. It's really having a tough time of it. I guess it's not ready to go just yet. The strangest thing is, after all the hype about this Japan trade deal, the corn was up initially on the news and is now down. However, the beans got a lift, I guess on the possibility of China coming back in and actually buying some beans. So the beans actually look quite constructive today. You might want to maybe you can take a look at that.
Soybeans? Sure.
Yeah, the November beans. And I'd still keep an eye on the corn, because I think the corn is in buy territory. Maybe Mike B can keep us posted on that, because he's pretty good at the corn. Wow, look at that. That actually looks like a pretty good, pretty good buy point. Yeah. And obviously, if there is some sort of a thawing of this thing on the tariffs, this thing could really, it actually could rocket these beans. They could move up very dramatically from here. This looks like a pretty good bullish formation. Could take beans back to 1,000. So I definitely want to keep an eye on that one. And if you could put the soy meal up as well.
ZMZ. There we go. All right.
Yeah, not quite as good as the beans, but nonetheless, you want to really see the meal pull ahead here. If the meal pulls ahead, it's probably the real deal. But again, if you're going to try this trade, you really want to be ready to jump. Not risk too much. Jump out just because we've had these one-day rallies before that have failed, and you definitely don't want to have another one if you're long. So but notwithstanding, it isn't a quite encouraging development. Do you see what it looks like on a weekly?
Sure. There we go.
Yeah, it's not perfect, but given the the double bottom there, and I think the beans are going to look better anyway. It could be, you definitely. The reason I always pay attention to these beans when they're making these lows is just like the last time, which had a pretty big rally from the May bottom. If you get one of these situations where the beans take off and go limit up, they're awfully hard to catch, and you never know where they're going to go. There could be all kinds of reasons why the beans are overdue for a really big rally, and more importantly, in the same way as coffee could bottom in the fall, anytime the beans bottom in the fall and the grains in general bottom in the fall, it's usually going to be a bull market year. It often is the start of a bull market. And if you listen to these guys on the agricultural program, they're all kind of waiting for the September USDA reports and things like that, because they're going to get a sense of what was successfully planted and what wasn't, and the acreage and all the rest of it. So on the negative side, the clearing trees and things in the Amazon to grow more beans. So they're probably growing beans in Ukraine. In fact, one of the things they mentioned on this agriculture show is the U.S. has kind of exported its expertise and technology all around the world, including very special grains and very high yield seeds, et cetera, that is basically producing an overabundance of grains in the world, in spite of all the hand wringing over climate change and everything else that you keep hearing every day. The fact of the matter is, sun and rain are good for crops. And if you get a bit more, if it's a bit hotter, it doesn't necessarily impact the, if you get a drought, obviously that's a problem, but there's been nothing like that in the US for a while. So the fact of the matter is that they've got so much grains, they don't know what to do with it. It's overflowing. Yeah, and it's going to get worse in the world because, in Africa, they're figuring out how to grow grains in Africa and places that used to be drought-stricken and things like that. So
the Chinese and the Russians are buying up lots of land in Africa.
Exactly. They're buying it in, where did I read about that recently? They're buying somewhere just unbelievable. Maybe it's California or Baja California or somewhere like that. They've been buying huge tracts of land. So, this is a real big problem for the future. Yeah, I mean, look, the farmers, it's not, the farmers, it's just a fact of life. I mean, they're in, if you produce too much of, it's the boom bust cycle. It takes when the farmers start throwing the towel in on coffee or beans or rice or whatever they're growing because they can't make money. That's what creates the new boom. When it's a pretty lengthy cycle. Yeah, as the nuggets are pulling back here, and the dusts are pulling ahead a little bit here, so we will get some sort of a trade by the looks of it, at least in the short term. See how we go tomorrow. The market seems to have gotten, after rallying earlier on, it seems to be stuck in a bit of a rut here. Yeah. So, and look, the gold could easily pull back to 15.25 again that you just had up. So, nice. By the way, the oil, the oil is heading back down towards the lows again. It's back in the low 50s. Yeah. And potentially poised for a breakdown. We might, by the way, just keep an eye on this tropical storm or potential hurricane that's coming, because the cotton, by the way, the cotton, maybe you can pull up the cotton, Dwayne. This is an unbelievable situation. This is the lowest price in cotton in decades right now. CTV or CTZ.
Futures, what month?
Probably in December or November.
Okay.
Look at that. I mean, this is kind of an economic barometer, and then you got, you got, what's his name, selling pillows and sheets and everything, and selling his Egyptian sheets, and they must be
Giza, right?
Right. And then you've got Pakistan, which is a big cotton producer. The cotton industry is definitely falling on hard times here. It's great for consumers, but not for the producers.
Yeah.
Can you pull that? Can you squeeze it up a bit? Sure. Yeah, remember when that thing went limit up back in a while back, 2018? It was that you kind of didn't see that one coming after the limit up. You think when you see limit up moves, they don't normally end that. Look at that. This copper. Wow. Look at that. What an incredible job. Jeepers.
It is. They ought to be giving away blue jeans right now.
Yeah. So, you are in an area where we could lift off from, certainly. I mean, look, as I said, it's the lowest in a decade, that's for sure. And, if we got a stab down to somewhere in the low 50s or maybe even in the 40s, probably not a bad place to get to start looking at the long side. And actually, look at the three-wave pullback over the last year. So we could be getting close to a cotton bottom here. And the reason I brought it up is because if we get a hurricane, usually you get a bit of a pop in the cotton. So that's almost like free money when that happens. And lumber, keep an eye on the lumber as well, because, you know, lumber usually jumps ahead of a storm. Don't wait for the storm to buy it. You got to buy it before the storm, you know.
Right.
So and the oil as well. So
Anything else you want to cover?
No. Listen, thanks very much. Oh, the only other thing is, in spite of the dollar today going higher, the Canadian and the Aussie are actually up today, quite sharply. So maybe might be worth looking at those actually. If you wouldn't mind bringing them up, Dwayne, just to see how they're going. Yeah, the Aussie. I mean, the Aussie is in trouble because the economy is in trouble down there, and they just lowered the rates. So, but it is reversing a little bit. Oh, look at it! It made that.
Look at that! They got a bullish engulfing.
Yeah. Right, you know what? It could be. Keep an eye on that Aussie, because maybe this is it.
This could be the turnaround. Yep.
Yeah, and the Canadian too.
Canadian.
I think the Canadian's a lot stronger.
There's Canadian.
Yeah, I think the Canadian. If these two currencies take off, you know, that's very good sign for gold and silver for sure, and maybe the energy too. So, I think that actually, you know, it's a potentially quite a bullish situation developing in this Canadian dollar here. So.
Right,
Okay. Listen, have a great afternoon, and thanks for the invite.
You too. We'll talk to you later.
Bye.
All right. This is the crude. Greetings. I'm going to show you just real quick what happened. The audio, this alert. But if you go to the now channel, Telegram discussion group channel, you'll be quick to say, well, that's, you can, wait a minute, that's just too simple. Hang on, I'll fix it. I'll fix it so you can actually hear it. Not a big deal, but at least you can hear it. Just hear me, man. Let me show you. That was a fast drop. Okay, there's the entry at 29.82. Here comes the first target, or the second target, 20 points later at 28.72. Now we're still looking for the final target here. Still working on it. No exit signal on the chart yet. These are 5-minute candles that you're looking at. I've got it set about medium speed on the Trading Room replay widget. Okay, there we go. There's the final target, 28.57. So 29.82 to 28.57. The president's tweet certainly didn't hurt this alert, but we were in the alert. Here comes the tweet. Who's not to take advantage of it? This is just one example of our many alerts that come out 24/7 around the clock, Logic 247. We also have the Concierge Trade Alerts, and our latest product is the Logical Swing Trader, and you can get the first 30 days of that free. Just to start the whole journey, if you're not already at eminitradingschool.com watching this video, wherever you're watching it from, go to eminitradingschool.com. All we need, your name, that's Jenny's chart from Australia. She sent that, shared it with me. Thank you for that, Jenny. I think I had another video here somewhere.
If you write anything on your computer, you need to get Grammarly.
I write pretty much all day, every day, and Grammarly makes my writing better.
As a student, I like that it's free. Yeah.
There's no audio on this one. There's the entry way down here. There you go. There's that drop from Friday. And the final target. Okay. All right. We've covered everything. We've covered Concierge. We've covered the Logic 247. Answered your questions. Time to go to our good word for the day. Stand by. If you have any other questions, any final questions, do put them in the chat box, and I will be more than happy to address those for you. Good word for the day. Here's a question. Do you really want God's blessing? We all say we do. Of course we do. Who wouldn't? Right? 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 Hosea 12:4. Jacob wrestled with an angel. You ever wrestled with an angel? They always win. Some of the toughest battles in life will be with God. That's because there's a Jacob nature in each of us that actually resists the will of God and wants to wrestle with him. That nature has to be dealt with. The same God who asked Jacob, "What is your name?" will ask you to identify yourself as well. And until you're willing to do an honest evaluation and answer truthfully, your life cannot change for the better. Now, God had to break Jacob by dislocating his hip, the thing he depended on. Jacob got his blessing. At the same time, he got his limp. Ask yourself this. Do I really want the blessing of God on my life? Now, before you answer, stop and ask yourself these questions. Number one, am I willing to let go of what I want if it's not God's will for me? We all know what we want, but maybe it's not the best thing for us. Maybe God has bigger plans, better plans, or just different plans. Now, if they're his plans, they're obviously better. Are you willing to let go of what you want in exchange for what he wants? Number two, do I long for what others have instead of waiting for God's provision for me? You know at church, it's happened. Just go in. You don't have to say anything to anybody. You don't have to nod your head. You can just nod on the inside. There's been a time at church, you were sitting there, you was enjoying the fellowship, it was good, and then there was some kind of announcement, or you overheard somebody speaking about so-and-so who got a promotion at work and a big fat bonus check, or they drove up in the church parking lot this morning in a brand spanking new Cadillac. Now, we know as believers, we should be happy for them, elated, just over the moon. Yeah, but there's that little something inside of us that's a little bit jealous. I should have got the promotion. I should have got the bonus. I should be driving the new Cadillac. Who do they think they are? Hey, the heart of man is desperately wicked. What can I say? Number three. Now remember, the question here is, do I really want the blessing of God on my life? Number one, are you willing to let go of what you want in exchange for what God wants? Number two, Do I long for what others have instead of waiting for God's provision for me? Number 3, do I keep talking about my rights because I haven't fully surrendered them to God? Number 4, do I truly love others and think of them first? Number 5, am I practicing the daily discipline of prayer and Bible reading? Number 6, am I allowing God to handle my public relations instead of promoting myself? That's a tough one. Number 7, am I expressing joy in the midst of adversity and trusting God to reproduce the character of Jesus in me? Number 8, am I taking risks in obedience to Christ instead of giving in to fear and playing it safe? Not only will your answers to these questions determine your discipleship, your direction, and your destiny, they will also determine your level of blessing. That's a good word for the day. When we last looked at this S&P chart, in the opening comments of the show, we talked about price heading up to this zone overhead. And again, this is last week's zone. This is why I tell you on Thursday, jot them down, because they can help you Sunday night, they can help you Monday, until you get your own passport and you have access to the fresh zones every Monday morning. Okay? So we made that 13-point trek back up since the show started. Now, we said it would appear that price is attempting to get back to the zone below 64.65. 1, 2, 3, 4, 5, 6, 7, 8, 9. This could be number 10. Are there any obstacles in the way? See that? The BBC is now above this weekly zone. Will that make it more difficult for price to get to the zone? Possibly. Remember, as long as price is above the BBC, we anticipate higher prices, right? Now these are so close together. We could come down, we could touch the BBC, spike it, just like we did here. That would fulfill touching the zone below, and then we bounce right back up to the zone overhead. Natural flow for this session was sideways to lower. We've ended up with sideways to higher. Let's see what happens as we roll into the close. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.